National Stock Exchange of India has been actively involved with initiatives to educate the young generation of our country on the importance of financial management. One such initiative is NSE FinWiz that focuses on educating and advising the young workforce of the country on wealth management to enhance financial literacy and to empower
Insurance is for protection and investment is for growth.
Another program facilitated by NSE IPFT is NSE Financial Quest. This inter-school financial quiz contest goes an extra mile by educating the young students on fundamentals of finance.
What is this?
It's the formula for the simple interest.
Simple interest is the right answer.
Under the NSE Financial Quest Base Camps banner, the program engages students around the year through workshops on various topics, projects, interactive videos and quizzes.
DiCaprio is bouncing checks off an hand.
Plus 75 Plus 75.
To facilitate these two programs, NSE along with CNBC TV18 has travelled across the country to bridge the wide knowledge gap in terms of finance. In this episode of NSE FinWiz, we are all set to achieve our objectives once again by gauging young professionals in a new city.
Hello and welcome to Season 4 of NSE FinWiz, powered by CNBC TV18, and I'm your host, Nitya Balakrishnan. Today we travel to Navi Mumbai, to the campus of one of the companies that believes in creating chemistry for a sustainable future, BASF India.
NSE FinWiz visited the headquarters of BASF in Thane with the experts to understand the employees' views on financial planning and wealth management with the theme Dreams Come True.
Plus or minus few years from 40 is a very critical age group where I come from, and that is very important from wealth management perspective, especially because this is a time when you need to be probably more rational than emotional, and you need to be sure of next 15-20 years and ahead. How would you like to lead your life?
I go for a long-term strategy because at this point of time, I am unemployed, right? So the money is any which way is coming in. My strategy is how to have ample amount of money post my retirement. So personally, I look at long-term investment.
I am presently investing around 30% of my income, and I plan to move up to 40%. Right now I'm investing in certain LICs, gold and in mutual funds.
Hello and welcome to NSE FinWiz, powered by CNBC TV18. For today's episode, I'm joined by very special guests, Firoz Aziz and Mehrab Irani. We're here at BASF India in Navi Mumbai. Thank you so much for joining us. And on behalf of young professionals everywhere, really, Firoz, if I can ask you, money matters. Whether you're, an engineer, a doctor, a fashion designer, whatever profession you're starting your own business, today money matters. How important is it to protect your money and also make sure it multiplies?
See, I think, like you rightly pointed, you don't have a choice irrespective of the profession you are in. Money comes as a byproduct, and that's one reason why you leave home in the morning. To part your ways from your family for the day. So it's a very important aspect of life, and making sure that it is protected and is in the right place to grow is one of the most important aspects. So understanding the key ground rules and elements of making sure that these two objectives of protecting and growing are taken care of, and in the initial part of one's life, if somebody could actually put his principles in place, they come a long way to financial freedom, because financial freedom is a status where all your goals are taken care of and you still have surplus money. So financial independence, which is the phenomena which one should try and achieve as soon as possible, I think that comes with the art of laying down principles and ground rules to move forward on this very important aspect like you mentioned.
Absolutely. Mehrab, if I can ask you, what according to you are top 3 vehicles to actually park your funds? Because when you talk about saving, inherently every Indian looks back to, the tried and tested mechanisms of a savings deposit, a fixed deposit, or even, a PPF. But what are the vehicles that one should consider today?
Yeah, I think, when you actually do an investment, you have to build a proper asset allocation. You have to allocate your asset between different asset classes, be it equity, be it debt, bonds or fixed income, be it gold. Some amount has to be in gold and some amount in real estate. So I think the whole basket of proper asset allocation will over a longer term give you much better returns with much contained risk. It has also been proved statistically that 90% of your variation in investment return comes only because of asset allocation, and only 10% because of market timing and actual stock selection. So I think asset allocation is very important. The vehicle which you are mentioning is, I think, one of the best vehicles which is today available to all of us is mutual funds. I think mutual funds offer the expert investment advice of the fund manager at a minimum cost, and today a whole gamut of schemes are available, whether it is equities, whether it is fixed income, whether it's bonds, whether it's liquid funds, or whether it's gold, and even now real estate mutual funds are also going to come. So I think mutual funds should be a proper vehicle to do a right asset allocation.
Absolutely. Well, a quick show of hands really amongst the professionals here. How many of us set aside a fixed amount every month towards investment or savings? How many of us here are invested in the equity markets via mutual funds or even directly? Mera, we did see that a whole host of players were invested in the equity markets. Two concerns that commonly emerge is A, do I participate directly? B, how will market volatility actually affect my returns? And why not park my funds elsewhere where I'm guaranteed maybe low, 8.5 or even lower, but at least it's steady income and it's guaranteed income vis-a-vis, equity markets. And talk to us about the tenure of investing into the equity markets, ideally.
So equities are very good for creating long-term wealth. Now if you have the time, if you have the energy and you have the knowledge, then you can directly invest in equities. But I think most of us are very busy with our normal day-to-day life and we may not have the time and even the energy to do that. So the best vehicle to do that is mutual funds. I think mutual funds offer a different variety of schemes across the gamut of sectors, and I think it's very nice to invest into a diversified mutual funds.
Absolutely. Firoz, if I can ask you to cut in here and talk to me about, is there an ideal mix when it comes to one's portfolio, when it comes to exposure to certain kind of assets? And B, when we talk about, mutual funds itself, what kind of exposure, to debt funds, what kind of exposure to equity funds would you recommend as, a person's age varies?
See, there are two factors which determine how much in each asset. See, first you have to understand what are assets. Assets are anything which you put your money and expect something back in return at some point in time. If I buy a shirt, it's not an asset because I'm not going to sell it and get some money. So asset allocation is nothing but a phenomena of allocating your money across different kinds of assets which actually pay you back. Anything which doesn't pay back is not an asset, right? So now comes what should be the ideal mix in these different assets. Like Mr. Mehra was mentioning, that asset allocation is very important. Then it's very important to understand the right mix of it. And that will have two important variables to consider. One is internal, what's my age? What is my risk appetite, which will determine how much should I invest in different asset class. The other very important situation which you will have to consider is the external factor of what is going to do well when, right? So if you look at the contemporary situation, for a person who's at the age of 30 today, he should have almost 80% in equities and 20% in gold and debt. And as your age progresses, 5 years, every 5 years, you should reduce your equity exposure. Equity, by which I mean stocks. Being a partner to a company is called equity, right? Lending to a company is called debt. Becoming a partner with somebody is called equity. So you should have 80% equity if you're 30. If you're 35, you should have 75% equity, and so on. As your age progresses by 5 years, you should reduce your equity exposure by 5%. Because your risk appetite, because you have lesser amount of time to earn, so your risk appetite gradually keeps coming down. So to make sure that you're not taking too much risk at the end of your life, working life, you reduce your equity exposure.
Madam, I actually want you to address a specific query of Sanjay Binewala, who's in the sales department here at BASF India. He wants to have a minimum 2 crore balance in the next 10 years and wants to obviously collect a corpus of as much as he can. 40,000 rupees is how much he's willing to set aside every month. Where should he park his funds is his question. If I can have Sanjay identify himself, please.
Yeah, hi Sanjay. I think since you have a long-term 10-year outlook, I think at 40,000 per month, you should invest more of your money into equity funds. The major factor of that must be, I think, into equity funds, maybe up to 70 or 80%. The remaining 10-15% you can even put in a balanced mutual fund, which will give you some amount of stability with growth. Also, I would advise that at least 3 to 6 months of your monthly expenses you should put in a maybe liquid fund or maybe in some kind of short-term fixed deposit for meeting any kind of contingency which may arise. Also, I would advise you that you should take or have a term policy insurance for the safety of your family and also medical insurance. So I think with that amount, if your corpus in the equity fund is growing at around 12-13% per annum, I think you should be able to reach your goal within the set 10-year period.
And on that note, it's time to slip into a quick breather right here on NSE FinWiz. But stay tuned, coming up on the other side, all that you need to know about borrowing and lending. So good to have you back here on the show in conversation with FinWiz and Mehrab. Thanks so much for joining us. In fact, it's time to talk about one particular aspect when it comes to personal finance, loans and line of credit. Simple question right off the bat, what is the difference really between loans and a line of credit?
Yeah, loans will be something which you actually borrow. When you actually borrow that money and you start paying interest and principal, that will be loan. And a line of credit will be something where you have an option of borrowing. Where you have a power of borrowing, you may use that line of credit or you may not use it, but you obviously have a right to borrow whenever you require those funds. So I think that would be the major difference between both.
First, if I can give you an example, okay, I make about 40,000 per month, out of which I'm willing to set aside 20,000 rupees towards a particular loan. I'm young, I'm going to look at a vehicle. Now, what are the top ground rules that I should have in mind? Should I go for an automobile in the 5 to 7 lakh range, in the 10 lakh range, at that younger age? And also, what kind of rules should we keep in mind when we talk about the tenure of the loan that I'm looking at, ideally?
So taking loans in a falling interest rate regime is a little more positive than in a higher increasing interest rate regime. So what's happened over the last 2-3 years is interest rates have come down in our country. So that makes borrowing a little more lucrative. But if you are very prudent in making a choice of why you're borrowing and not stretching beyond your means, then it's great. Otherwise, like if you're young, if you use your entire loan limit possibility on your salary, if you have a 40,000 rupees salary, there would be an X amount of loan you would be entitled to. How much is that? You need to figure out. And should anybody use more than 50-60% of his maximum borrowable capability on his financial status, anything beyond 50-60% actually is not a very good idea, right? Because you will have to keep a buffer of at least 20-30-40% of what you could have ideally borrowed in rainy days you might just need to borrow for something more important than luxury. Right? So if you have a limit, now how does one decide whether I need a 5 lakh rupee car to be bought or a 10 lakh rupee car to be bought? Is by figuring out if you're entitled for a 7 lakh rupee loan. Okay, you should not use the entire 7 lakh rupee, you are only entitled to use 4 lakhs. That's the internal discipline you'll have to maintain and not exhaust your entire limit.
Mehrab, if I can ask you, one thing that everybody wants to know is how sensible is it to pre-close loans? Talk to us about pre-closure of loans and in what case scenario do we exercise that right?
I think if somebody has money, he should always go towards pre-closure of loans. Because when a person borrows, or even if in a mortgage also, in the initial years, the majority of the money goes towards payment of interest and very less towards principal. So if you have whatever money, if it is just lying idly in your savings account or in a liquid mutual fund, it's always better to remove that money and pre-close your or make part payment of your loan. So at least that part payment goes towards direct reduction of the principal of the loan. Rather than in the EMI, a lot of goes towards the interest. So it's always better that idle cash, use it for prepayment, even a part of the loan, even whatever little amount you can do, because it's directly reducing the principal of the loan.
Thank you, Feroz, for that. On that note, it's time to take another quick breather right here on NSE FinWiz. But stay tuned. Quick fire question and answers on the other side. Welcome back. We are in BASF in Navi Mumbai, and clearly we have a whole host of young professionals here waiting for their personal finance 101 with our experts. In fact, can we have members of the audience identify themselves and pose a question to one of our experts, please?
Yeah, hi, my name is Akil. I'm in BASF as a manager. Now my question to you is, as you said, real estate is a no-no right now at this moment. But what about buying a property and renting it out, so that a part of a burden of your EMI is reduced, and then in a long term you get that benefit that you are paying less interest on the property, and in the end you have the asset which you can sell it at a good price later on 10 years or 15 years down the line. So what is your advice on that?
Feroz, if I can have you take that.
See, it actually doesn't make too much sense to do that. The reason being as follows. You have to find out the ratio between the interest you pay and the rent you earn. For example, if you have bought a property for 50 lakhs, for example, you will have to pay an interest of 5 lakhs. If you get a rent of 1 lakh in a year or 2 lakhs in a year, of course your interest is 5 times more. Generally in any metro, the interest in India currently is 5 times more. If you have a 1 crore house, the rent will be 2 lakhs, 3 lakhs for example at the maximum, and the interest is going to be 10 lakhs. So globally, in fact the phenomena is just opposite. If you did some homework on a matured market like London, the rent is, let's assume 3% and the interest is 2.5%. So in that situation it makes perfect sense to borrow, buy the property and rent it out, because the rent will take care of the interest.
Hi, my name is Shatla. I am a product manager. Now my question is on gold investment. I want to ask that, considering physical gold, the gold funds, the bonds, as well as the gold monetization schemes which are available, where the investment is more advisable?
Alright, Amera, physical gold or paper gold? Questions very clear.
Hi Shraddha, as an asset allocation, I think around 10% you can allocate towards gold. Now whether you buy a physical gold or actual demat statement or e-gold, that depends. But I think obviously it is always better to go in for to buy into a demat account gold, which is a liquid this investment. Now I'll give you an example. If you say buy in a physical gold, number one, you have to incur storage costs. You have to either buy something, some locker or something, or you have to rent in a bank or something where you have to pay rent. Also, you have to incur, if you take insurance, you have to incur insurance also for that. And you have to also, if you buy ornaments, then anyway that is not an investment, because there are some kind of making charges, 15 to 20% in that. On the other end, if you buy in a liquid demat format, then it's a very good investment, because there are no storage costs, there are no making charges. Yes, there is a very small amount of fund management fees, but which are very minimal. So you get an investment. Plus, if you see from a tax angle also, physical gold becomes long term after 3-year period, while in a demat form, in an electronic form, it becomes after 1 year. So from all angles, it is as an investment. If you have to do in gold, it's always better to do in an electronic format than in a physical format.
Thank you so much for that. In fact, in conversation with Mehra Barani and Feroz Aziz, it's been an absolute pleasure having you on this episode of NSE FinWiz. As everybody here at BASF India, from the entire team and I, thanks for watching.
Focus, ideate, innovate, enable.